Mic check.
I thought I knew everything until I had a brief meeting with y'all this morning.
Well, we are letting people come on in at the same time as we get started this Saturday morning at 10 a.m. Welcome, welcome, guys. You guys can join on in. Happy Saturday. So excited for our Wealth Symposium meetup. We are doing it as a virtual event today. And just so you guys know, our meetup is a celebration. It's a chance to talk about good things that we have done, things that we want to do, connect with professionals. You know, this is not an expo. Our expo is on Black Friday, as you know, but this is a meetup so you guys can have some time to connect, have some cocktails, hang out, talk to us about what you want to do, connect with the right people, and get you to the next steps. But welcome this morning to our Wealth Symposium meetup with Ebony Lucas, State Rep LaShawn Ford, myself, Natasha Robinson. I come to you this morning from Building Dreams Foundation, a non-for-profit organization that was started 13 years ago. And the purpose of the foundation was to empower individuals, families in underdeserved communities, providing essential education, resources, and support services that promote financial literacy, home ownership, and economic growth, right? We believe that everyone deserves the opportunity to build a better future, and we are committed to breaking down those barriers that hinder access to vital information and services. So we are excited to join this mission and get it started. It was started a long time ago, but we've been doing so much work in the community, basically following this mission. So now we are really targeting on getting to that mission and helping as many people as we can. So that is about Building Dreams Foundation, and we are going to get to the next slide. Ebony, you want to get the party started?
Yes, I want to introduce our speakers this morning. And one second, because I have these outstanding bios. I am going to start with White Wilson and Associates. White Wilson and Associates is a full-service certified accounting firm, and they provide all accounting service and financial services such as payroll, quarterly reporting, profit and loss, bookkeeping, accounts payable, 941s, reconciliations, modifications, so much information that they provide. They were planned, organized, and implemented they've planned, organized, and implemented the opening of over 120 companies. So you're looking to start a company, White Wilson and Associates might be where you head. Next, I'm going to tell you about Brian Jackson. Brian Jackson stands as a dynamic force in the realm of finance, weaving a narrative across diverse sectors, including retail, consumer goods, investment, and corporate banking, public accounting, and consulting. His journey places him at the forefront of financial leadership, armed with a potent blend of skills and expertise that set him apart. In his current role as president of Blake Allen and Associates, Brian orchestrates a symphony of financial services, from accounting and business advisory to tax planning and preparation. His leadership delivers not just expertise, but also fosters financial security and literacy through honest guidance. Thank you, Brian, for being here this morning with us. And certainly, last but certainly not least, Patrice Stewart is a formidable force in the tax, accounting, banking, and finance industries. With over 21 years of experience, Patrice has gained a reputation as a seasoned professional adept at navigating the complex world of taxes and business strategy. In 2008, Patrice started her own venture, P. Stewart and Associates, a tax and business consulting firm. This step marked the beginning of her entrepreneurial journey, even as she continued to climb the corporate ladder. A significant shift occurred in 2013 when Patrice, after a layoff, decided to embrace full-time entrepreneurship. I know what that's about, Patrice. She took a leap of faith and chose to dedicate her efforts to empowering others, leveraging her knowledge, and helping them transition from being employees to entrepreneurs. Welcome, Patrice. Thank you so much for joining us this morning. And we're going to jump right into our conversation. So I see some of the speakers are on mute. Take yourselves off mute, because this is going to be like, this is a conversation. We don't want it to be, it's morning, right? So we want to wake people up. We want to be engaging. And State Rep LaShawn, I should introduce myself. I am Ebony Lucas. I'm a real estate attorney and investor. And I also want to introduce State Representative LaShawn K. Ford. Now, you know him as a state rep, but LaShawn is also a real estate agent. So he also knows about entrepreneurship. Yes, Patrice said she didn't know that. And I told LaShawn, I said, we got to make sure we let people know. And he's not a new real estate agent either. How long have you been a real estate agent, LaShawn?
97. It doesn't have anything to do with my age.
He is a seasoned real estate agent, and I've worked deals with him, and he's really great. So LaShawn has a question for you that we're going to start with.
Well, you know what? I want to first thank Building Dreams Foundation for their work in the community over the years, teaching and educating people, and for hosting such a very, I think, pivotal topic when you think about buying real estate. And it leads to my question, taxes. I mean, doing this for so long, I run into buyers or potential buyers, dreamers that want to buy, but the tax issue is something that sometimes get in the way. And what I mean by that, sometimes they don't pay taxes, they overpay, or they don't pay any taxes. For instance, a barber or a beautician, they may do cash, or you may do your taxes and you want to do everything to avoid the tax liability so you don't have to pay Uncle Sam. There are just so many complicated issues. That's why I'm happy that we have an attorney on here, and we have Building Dreams Foundation leading the way, and we have our experts as it relates to taxes. So what do you tell people about overpaying, not paying, or underpaying their taxes when you want to buy a property?
I can go. I thought someone else was going to go first. I can
jump in.
Okay.
This is for all of our panelists.
Okay. So one of the things that I always like to ask and break down, because I think what really needs to happen, I agree with what you said, LaShawn, is really we need education, right? So that's one of the things that I focus on with my business is the tax and business strategy part of it, because we like to lump everything in one pot, right? Business is huge, right? It's based off industry. I'm in taxes and business strategy. Cynthia's in accounting. You know, every industry is different. So taxes are not the same for every business, every industry. And then it's definitely not the same with how you're set up. So I always like to find out, how is the client set up? Are you self-employed, filing as a Schedule C? Are you a corporation filing on an 1120? You know, are you an S Corp? All of these are different entity setups. And that's the first thing that we have to do is break that down and explain that it's a difference. Everything is not a one size fit all, right? So it's really a conversation that our clients really need to be having with us before they even file their taxes. If they know, I like to ask my clients when they come to me during tax time, hey, are you looking to purchase a home this year? Are you looking to purchase a home next year? Because now I know how we need to file. Every year we can't be aggressive with tax deductions, right? Some years we may need to be a little subtle. This year we maybe can't take every single expense that you did because we need to maintain this income for you to be able to be approved for this property. So I'll stop there, but that's kind of usually where I start with clients.
Yeah, I would even, this is Brian Jackson. I would even take it a little step further, right? And even be a little more basic, right? Many people don't even understand what tax is and what tax they're actually paying, right? So just to get real basic, if you look at what tax is, it's basically, a payment that's imposed by the government, right? In which that payment is being used to, fund some type of service, some infrastructure, some education, healthcare, and so forth, right? And then there's several tax brackets, right? The lowest tax bracket is 10%, the highest tax bracket is 37%. And many people think that if you end up in a certain tax bracket, say the 22% tax bracket, let's just say every dollar is taxed at 22%. That's not correct. We have a gradual system. So your first $11,000 is taxed at 10%. The next 12,000 or 47,000 would be taxed at like 12%, and then the remaining would be taxed at 22%. So when you end up in a certain tax bracket, many people don't understand also that you have a marginal tax rate, which would be your 22% tax rate, assuming that you make 100,000. But then there's also an effective tax rate, and that effective tax rate is basically your total taxes paid divided by your net income. I also talk about taxes being actually your largest bill, and it's by far your largest bill. Most people are working, anywhere from 3 to 4 months just to pay the total taxes that are owed for the year. So that's how my conversation starts with clients, just helping them understand this is a huge bill that needs to be managed.
And to jump on the back of Patrice and Brian, there are other taxes that when they come to me, depending on the business type, that we do talk about. And these are things that need to be talked about before the business is bought up, because these are taxes that are not considered. And they could be the sales tax because of what you might be selling in the business. They could be the payroll tax because you're pulling the payroll. They could be an excise tax because you're in the phone. It depends. Importation, exportation taxes. So it makes sense to have a full business consultation with someone that can help you from beginning to end. Because what I actually run into a lot is people are opening up businesses and fail because they have gone to CyberDrive and obtained an LLC or a corporation and have petitioned the federal government for an EIN number. They still have not gone as far as to register the business with the state of Illinois. The state of Illinois says if you don't register the business, it's not legal here until you do. So in the missing of the registration to the State Department, they missed the sales tax registration. They missed the excise tax registrations. So there are a lot of taxes that are affiliated with the opening of a business depending on the business type.
Thank you all. You guys are sharing gems already. I'm learning, so we appreciate that. I think Brian talked a little bit about what taxes are and how they're calculated, but can you explain the difference between a 1099 and a W-2, and when someone can expect to receive a 1099?
So a 1099 is basically a contractor, right? So the contractor, in essence, has its own business or their own business. A W-2 is someone that is working for an employer, and the 1099 or W-2 should be provided to the individual by January 31st of the year that we're in, so 2025, let's just say. One of the significant differences, though, between how a W-2 employee is treated versus a contractor, and when we talk about these tax savings, in my opinion, the most significant tax savings that you can have is if you are a business. So if you're a contractor, in essence, you have your own business. If you're a W-2, again, you work for someone else. And I would tell you that the government loves W-2 employees because they are assured that they're going to get every dollar of the tax that's owed to them. Versus a business, a business pays their tax at the very end, right? So I make some money, I have expenses associated, with the money that I made, and then the bottom line or net income is what I'm paying my tax on. So it is a significant difference between, an employee that makes $100,000 versus a business owner making $100,000.
So speaking of businesses, we have all of these people on the internet that are like, hey, what you need to do is go get an LLC, get an EIN number, put your kid on payroll, and then write off the money that you pay your kid. I see you smiling, Patrice. Patrice, I'll let you jump in and tell us about that.
And my $6,500 a kid, I've been trying to get my $6,500 a kid. I heard I can get.
Patrice,
You laughing, I'm dead serious.
So, Ebony, you are correct, right? Unfortunately, today with the world of social media, we have all of these people who love to share all of these things and really don't know how to break it down, right? That's a part of my conversation a lot on my social media. But tax strategies are real, right? And I completely agree with Brian, and that's really what I tell my clients is when you work with a professional like us, we can break down to you the real benefits of owning a business, which is why I've really focused on empowering more employees to become an entrepreneur. And a lot of 1099 contractors really don't look at themselves as entrepreneurs. I have to explain that to a lot of them, especially when I'm like, where's your profit and loss statement? Where's your balance sheet? Where is this? Where is that? A lot of them just look at it as I get paid in cash. A lot of them don't look at themselves as an actual entrepreneur and that they should really be running this contracting business as an actual real business, right? Because that is the benefit of that 1099, whether it's a 1099 NEC, whether it's a 1099 miscellaneous. It allows you to write off expenses that a W-2 wage earner cannot write off, right? So there are different strategies that can be utilized, again, based off of your industry, what type of business you're running, what type of expenses and income you're making. But me personally, I live my entire life through my business. Right? And I tell people that we have to stop thinking as consumers, especially when you are a business, and start thinking and putting yourself in the mind of an entrepreneur, because based off of the business tax code, right? We can do a lot. And so one of the things that I just throw this out there is one of the strategies that I kind of put together or implement with some of my clients is, it depends on how you're set up. I personally have a corporation. So with corporations, we have to have an annual meeting, right? We have to have that. LLCs do not. You guys are members, so everything is different, which is why I say your structure of how you're set up is really important in what type of tax strategies you're going to be able to take. But for me, I'm a corporation, so I know annually I have to hold this meeting. There's no law in there that says I have to hold my meeting in Chicago. If I want to hold my meeting in Florida, if I want to hold my meeting in California, I can, as long as all of my board members are there. But who's part of my board? My immediate family, my mother, my cousin, right? Have actual roles in my business. So when we actually prepare and I plan for this annual meeting, I may plan my annual meeting I held one year. I usually hold it around June or July, which is around my birthday time frame, right? So now I'm taking that it's my birthday to it's my annual meeting, right? But you can literally strategize and put together certain things in your life to make it match with your business, of course, to make it, legal and make it make sense, because again, it is a strategy. So it has to be planned out. But just things like that, right? And when I share that with people, a lot of times entrepreneurs, that it's like an aha moment, because they're not really looking at themselves as a business. They're still looking at themselves as just an employee being paid in cash. So the 1099 workers are one that I really end up trying to work with to, kind of reprogram that mindset, so that way they can understand that they are an actual business.
You want me to press a button on you on the book accountants and are you guys accountants? I'm sorry, I want to address y'all right. Thanks for being here. Accountants, yeah. What should we call you?
We got accountants, we got CPAs.
So I'm a tax and business strategist. I'm not a formal CPA. So CPAs are licensed. I don't have a formal license. I've been in the tax industry for 21 years, but that's the title that I have, is tax and business strategist.
Well, I'm gonna give you guys one that'll really push a button. As a business owner, you get people to do work for you, and you pay them a check or you pay them cash, and you don't give them the documents to write it off. And then at the end of the year, you'd be like, I gave Ebony $15,000. And then you guys are going to say to me, well, did you give them a
1099.
99.
Yes. Can y'all speak to that and how it's important to make sure that as a business person that you do that type of stuff, because otherwise the contractor that you hire is making over on you.
Actually, I would like to piggyback just what Patrice said about the trip and the thing. I always say for audit purposes, make sure that when you're doing that, you stick an itinerary with it or an agenda, because that's what the federal government will be looking for. So you can prove that you had that meeting for that purpose. You had the agenda and the itinerary pulled out already. When it comes to the 1099s and people being paid cash, that's why those business consultations are very important, because if you're paying people cash, they should be signing a receipt. There's something that should say that you gave them the cash that they should sign for, because generally at the end of the year, if that's not done, you give them a real good fighting point. I didn't receive that. You didn't give me that. I never got that amount of cash from you. But if it's documented, it's usually not a problem. Just like they said, if it wasn't written, it wasn't said. So if you can get it on paper, just to have them sign a receipt, even if you pay them in cash, just to have them sign a receipt saying that they received it. Then to make sure they do a W-9, a copy of their driver's license or their ID and their social security card or the EIN number to verify. Because come the end of the year, people, if you haven't obtained the information before the end of the year, they don't like to give it up at the end of the year. It's hard to reach them. So it's doing your due diligence at the beginning so you don't run into that problem. That's why those business consultations are very important.
And they don't want to, you got to get it
Cynthia, how
before
much
you
do
give
you
them their
have to-
last check. I'm sorry. You got to
Right.
get it to them before you give them their
Right.
last check.
That part.
That's
Yeah.
the way you're going to get it.
That's
Right.
why if you do it
Cynthia,
in
how
the
much do
beginning,
you
you're
have
not
to pay
chasing them in the
someone?
end.
Cynthia, how much do you have to pay someone before you have to give them a 1099?
Good question.
The government says $599. They're trying to drop it to $495, but yeah, they're trying to get them on paper now.
Okay.
And I didn't share this in the beginning, but when I first started about 20
That's
something years ago,
aggregate,
whatever,
right? Let's make sure that that's aggregate, not just, that's for the whole year. So it could.
that's for the year.
Annual, correct.
Okay.
Yeah.
Right. But when I first started about 20 something years ago, Miss Cynthia White is actually my accountant, and my books was totally messed up. And LaShawn Ford was my realtor, guys. And I had to come to this guy who was doing my taxes before so I could purchase that house. And Miss White was actually to come in and clean it up. So it's nice to work with the professionals in the beginning that know what they're talking about, so you don't find yourself in trouble in the future by not asking these questions. So let's go with the next question, Ebony.
Hey, can I just add one thing in regards to the
Absolutely.
1099s? It's actually a good business practice not to even issue a payment until you have a W-9 on file. So then it's
That's how
never
they
an
do
issue.
us with the foundation. They like, we'll give you a check after you sign this 10.
Yes. I
Exactly.
agree,
So,
Brian. Yes,
yeah, you
I
guys
agree.
are giving
You don't
good
make one
nuggets.
payment until you have that. We see it too much.
And as
Yeah.
a matter of fact, everybody who registered, we can email you guys a copy of one if you need it, just so you can have it at your records. But you can always Google and download the form or use one of the professionals on the line today to assist you with that. But going backwards and getting things is very difficult, especially when you're dealing with contractors. That actually happened to me, believe it or not. And you can be in this business forever and make huge mistakes. And my framing guy, I think I paid him like $95,000 on this job, and I didn't get the 1099 signed in the beginning because it was a lot going on, and it was so hard to get it at the end, because once that 1099 is out there, they have to pay taxes on that money, but you can't write it off if you don't get it. So it's like you're basically paying them 20% more if that's your tax bracket by not getting the form complete. So it's very important to make sure that you're getting the appropriate documents and you're having that one-on-one consultation with your accountant, so you're set up for success before you start, because winging it along the way, you're definitely going to drop some balls.
Yeah, so that's a great segue into our next question. Is you talked about tax bracket, and it's confusing. Like, what's the difference between an LLC and a corporation and a S corp? What are these entities? Do you write these expenses off on your personal taxes? Do you file separate business taxes? I know that's like 5 questions in one, but if we could just talk a little bit about that.
Well, generally, if you go to the CyberDrive and you want to open a company and it's just you, LLCs were give the protection to a sole proprietorship so they can go into business and be protected in the business world as long as there's no fraud. Those generally are filed out on the Schedule C. If you go into it and you're obtaining the EIN number from the federal government, you let them know it's more than one person, and it's an LLC, they'll turn it into a partnership. You can go online and you can open up a corporation. You have to petition the federal government to become an S Corp if you decide to do it that way. A corporation is a C Corp, it'll stand out by itself. A S Corp is one of the, it files out as a corporation, it's a personal corporation. That will, the bottom line will transfer over on the Schedule K-1 to your personal return. A partnership return is the same way. The bottom line of that is going to transfer over to your personal return. A corporation is an entity that carries its own weight. It pays its own taxes. It writes off its own stuff. The other entities will transfer over to you personally or will be filed out personally.
So what is, tell us what is an S Corp and what are the advantages of it?
I mean, so an S Corp actually is a corporation, right? But you are making an election to be treated as an S Corp. And so the term S just refers to the section of the code of the Internal Revenue Service Code that kind of dictate the rules of what an S Corp is. But an S Corp, like you said, is a flow-through entity in which you will receive a K-1, which hits your individual tax return. One of the most significant differences in being an S Corp versus, let's just say, just an LLC, is the taxation of the money that the business actually makes, right? So as an S Corp, you're required to take a salary, right? Because you can be an employee of the S Corp. That salary that you take is subject to self-employment tax or Social Security and Medicare. But the money that the business makes, right, is not subject to that. So let me give you an example. Let's just say you have someone where the business makes $100,000. Okay, if the business makes $100,000, you have to take what's called a reasonable salary. A reasonable salary, there's no definition, but on average, you probably take a third, right? So let's just say this person takes roughly $30,000 as their salary. Their salary is subject to Social Security and Medicare. The remaining money that the businesses earn, that's $66,000 that flows through to the bottom line, is not subject to Social Security and Medicare or self-employment tax, right? So it's only subject to income tax. So on average, that's like 15.3% of tax savings just because you were an S Corp versus being an LLC.
Are all federal taxes paying into your Social Security for the future?
So when you look at taxes, you have an income tax, right? So the income tax is, the tax brackets I talked about earlier, anywhere from 10% to 37%, depending on the type of money that you make. Then there's Social Security tax. That Social Security tax, you're subject to 6.25% as an employee, or if you're a business, it's 12.4% basically. But that is subject to, I think, up to $168,000. And then you have Medicaid or Medicare tax, and that is 1.45% for an employee, or if you own a business, is 2.9. So if you own a business, that's how you get to the 15.3%. But even if you own a business, you get a deduction. So the effective tax rate is roughly like 4.1% of additional tax that you're paying for self-employment. So if you're an S Corp, the money that the S Corp makes is not subject to that self-employment tax. So if you have a business that's making significant money, that is huge savings.
Man, this is amazing. I mean, you guys earn your money, and I got to tell you, team, Natasha, I think that this is a good one to bring back with investors, to teach people how to, do you say avoid taxes? Do you avoid it, or do you do tax shelters and all that? I think there's something that we have to come back together.
Right. And so I would
how
say,
do you know when you need an accountant?
well, just real quick, can I interject something?
Yeah.
So it's I don't believe it's tax avoidance, right? I mean, we we are consulting with clients to provide them avenues they can use that are well within the rules, right? I mean, this stuff that we're doing it's by the law. It's ethical. We aren't doing anything to avoid anything. What we're doing is putting strategies in place to help you minimize the liability that you owe.
Right. And can I piggyback off of the S Corp too? Because I like to explain to my clients just so they kind of understand. The S Corp is the tax designation, right? You can attach an S Corp to an LLC or a corporation. So, because a lot of people do think that the S Corp itself is corporate, but technically it's the tax designation. That's what you're asking the IRS to be taxed as, the S Corp. And a lot of people don't know that having an LLC, you can actually still keep your LLC and maintain your LLC, but just apply to the IRS for the tax designation, right? And so, Ebony, kind of going into your next question was, when do people know? It's based off of your income. Right, tax strategies are based off your income. So I and it's different incomes. I think, you know, in the industry, sometimes across the board, we try to keep it kind of, for me, I can only speak for myself. I try to tell clients, once you start reaching that $100,000 mark in your business as far as making profit, you want to look at that, especially someone who's filing on the LLC Schedule C, because on average, if you make $100,000 on a Schedule C, you're paying like $36,000 in federal taxes. If you aren't taking any deductions and you're claiming a flat $100,000 in income, that Schedule C is taxing you up the wazoo, right? Whereas now it may make more sense to look at an S Corp designation. Is this something that fits you? If you can pay yourself payroll, kind of like what Brian said, if you're making an average of 100,000, you pay yourself 30,000 on payroll. Can you commit to that? Can you handle that? Does that work for you? Right? Because that's all a part of that S Corp designation, is you have to pay yourself as a W-2 wage earner. And a lot of people jump out the window. I've had clients walk in the door, a brand new business, and whoever they went to set them up as an S Corp. And I'm like, you don't know, whoever you're working with doesn't know what they're doing. They're just setting up companies, because no one in a brand new business should be an S Corp out the gate if you haven't made $1, right? Because you have that requirement from the IRS. So
You saying you have the requirement to
file that to pay yourself as a W-2. You have to pay yourself as a W-2. Right. That's one of the biggest things. It's a couple of things. Let's say it's 10 different things that you have to have with that S Corp. Less than 100 members, you have to be a U.S. citizen, things like that. Right. But majority of the people are going to probably have those parts. Let's say they can get the 7. Right. But that other bullet point, you have to be ready to pay yourself that W-2 payroll. And a lot of people are not, there again and ready for that. So for me, I see a lot of people that are prematurely set up as an S Corp, and we have to actually remove that designation off. I see that more than I see people who don't have the S Corp, which is
which one
weird.
do you get, the K1, and which one do you get?
That's the K1, the S Corp.
Okay.
The S Corp is the K1. If you're self-employed, 1099, you don't have a formal company set up, you're more than likely filing on a Schedule C. But if you have that S Corp designation, that's when you have 2 completely separate tax returns. You have that corporate 1120S tax return, and then that K1 comes from that corporate 1120S tax return. The K1 is what goes on your personal taxes. So when you're, when you have that S Corp, you are filing 2 separate tax returns. It's no longer a LLC that's attached to a Schedule C, because the Schedule C is attached to your personal return. And that's again why we have to have these conversations, because to me, I like to tell people, you want, like you said, you set it up on paper and you think you did something. The easiest part of business is setting that LLC up and getting that EIN. That's the most simplest part. This right here, having these conversations like what we're having, is really when you're really serious about business. And again, for me, that's that education part where I have to kind of school some of these people and tell them, hey, you're not really where you think you are. You're not ready for this yet, right? We have to backtrack. Let's come back, because a lot of people get in trouble. You can get fined by the state. The state of Illinois is really big with that. I've seen a lot of people get fines for not filing their W-2, not filing their forms, because they're like, well, I didn't make any money in my business. Well, the government and the IRS doesn't care that you didn't make any money in your business. You set this company up. You told them, I'm ready to be a corporation. I'm ready to be a LLC. I have an EIN. But then now, because you're not making money in your business, you're thinking that you don't have to meet the requirements that you have to still meet to manage and maintain this business. So again, it goes back to education for me. That's where I see the biggest part in this industry for me, is that lack.
I'm happy that Building Dreams Foundation has this. But Ebony, you asked a very, very good question. And that was, when do you need an accountant? Because you have people out here that's working 1099. They're getting paid 1099. And so for instance, I'll just give you an example. My daughter just got her broker's license, and she's a student still, but she's going to be getting paid 1099. Shouldn't she be engaging, and should she open up her own corporation? I know that it sounds like work, but when you're in business, you got to put up with the work. You can't be lazy. Yes, it requires work for you to be doing it, but is it in your best interest, if you're making money as a 1099 contractor, to set up a corporation?
I think the short answer to that question is yes, right? I mean, the reality for most people is that they don't know what they don't know, which is why you need to engage someone that's been trained to do it.
Yeah. Well, I want to, first of all, thank everyone who has been watching this so far. We have gotten so much information from our tax strategists and CPA and accountants here today. I want to make sure that we are answering questions that our guests have. So Vanessa asks, what if you are doing both, meaning you have a W-2 and you have a business, but the business has not earned $100,000? For example, if you're flipping homes and you have capital gain profit of $50,000, do you need an S Corp, or what do you do to help you with capital gains?
In the filing of tax returns, everyone's situation is going to be different. All right. So it's going to be depending on the individual. If you have a W-2 job and you're working at LLC, which is your side business, you will report on the 1040 your W-2 information. The Schedule C information will go there. But you should not be waiting to decide your business structure on $100,000. Your business structure should be decided on your plan to open a business. So when you're serious about opening the business, that's when most of the planning should start. Because if you start receiving documents after the year has gone by, you're now in the tax situation you might be trying to avoid. So what you're trying to do is talk about it before it happens. And that's the best thing we can do for ourselves. Things happen for us and then we go see people. But we're in a situation that has now cost money when it wasn't necessary. We are working a business. They want us to report the income so we can pay taxes on it when we make money. Well, we can report the losses also to help us save our money so we can continue to run the business. So the business filings, like Patrice and Brian have stated, when you go and you open up these businesses, you're giving a commitment to the federal and state entities that you understand you have these business, you will comply with the rules and regulations that have been put forth for us to follow. So in the midst of all of that, if we don't do our due diligence in the beginning, we are apt to suffer in the end. And that's generally what happens. So we have to learn
so much for that.
Reach out in the beginning.
Thank you for that.
I want to go back off of that. Here's the thing. The question is, the flipper that's flipping properties, will that person receive a better tax? I don't want to use break. I'm not, see, I don't, is it better for their tax purposes? Yes. Is it a better tax strategy for the flipper to be setting up a corporation? Is it better for them when you talk about filing taxes and not paying so much? Because otherwise you could just buy these properties in your name and you could get the check in your name and you could pay taxes and you could write off the expenses, which is better, corporation or personal, to do that?
Number one, I think, this is me, for business structure, you need to protect yourself in a business. So in the beginning, I always like a structure because accidents happen. They're not meant to happen. That's why they're called accidents. But a structure can help minimize the cost of the accident if that happens. So we always need to be in the midst to protect ourselves anyway. When it comes to taxes, we could be taxed at a higher rate personally. So you want, if are you going to be in a business mode, sometimes a person's personal situation should be considered as to how they're going to structure their business, because it has to be structured for them. So everybody's situation is different. That's why I say in the beginning, it's very important to reach out to that accountant. It's not to wait till you get a statement. If you know you're going to be a contractor, that means you're self-employed. That means there are certain things that are required upon you. Keeping the keeping of receipts, the keeping of the income, the sign of things like we were discussing earlier, if there are no invoicing to show. So it's just a matter of knowing dotting your I's and crossing your T's and making sure that everything's in place so you don't run into that. So when it comes to someone that's in a business structure and they're receiving the 1099, these employers are telling you you're on your own. Therefore, you have to protect your own.
So I think, Vanessa, what our professionals are telling you is that you probably should meet with a professional who can assist you with what your tax strategy is for your business and your W-2, because it sounds like it depends. It's not just like a flat amount of money, but it depends on your overall circumstances. So feel free to reach out to Brian, Patrice, or Cynthia. They are all competent and can help you to determine what would be best for your flipping business.
And guys, I just want to say, I know Patrice is going to be logging off soon. So Patrice, if you want to drop also in the message how people can reach you, or if you want to tell them that as well, and we'll get Brian and Cynthia's, but I don't want you to leave without getting a chance to tell everyone how we can contact you in the future.
Thank you. Thank you. I can do till 11:15.
Okay.
And I still put
Great.
my info
So we're
in
going to we just have a couple more questions. Denise Thurman asked, how many bank accounts do you suggest that we have? I have one paying for operating expenses and one for capital gains, but do I need another one for taxes? I will say, just from I'll speak as in an attorney position. I'm glad to see that you have an operating account, because a lot of people, I've seen investors, real estate investors, put the money that they make into their personal accounts. Even if you're paying yourself, the money needs to go to the business first and then be paid to you. That's how you keep your limited liability. That's how you keep your legal protections. So from a legal standpoint, your money should always go into your business accounts first, even if you're paying yourself with those capital gains. You can pay yourself from that business. But when you start to commingle the funds, you put your business funds into your personal account directly, then you can possibly have legal issues down the line if there were to ever be a lawsuit. So that's the legal answer. I'd love to hear the
because there are always two answers.
Yeah.
Two
I'd love to
perspectives.
hear the accountant answer about whether or not it matters how many bank accounts you have, and do they need a separate account just to pay taxes from?
Yeah, so I counsel people on trying to keep things as simple as possible. So you're spot on with the operating account. You definitely need that account. So monies are not commingled. But in addition to an operating account, depending on the size of the business, I would create a separate account just for your estimated taxes that are going to be owed, and then maybe also have a separate account for your payroll. Outside of that, I don't know if I would have any more than 3. Again, depending on the size of the business.
Okay. So we have this is our second to last question. And then we're still taking audience questions. So if you have any questions, please feel free to put them in the chat. Mecca, if there's questions on Facebook, if you want to just send them to me, then I will make sure that we get to those. But want to make sure we ask, this is the big question. I want to be like some of these politicians who we won't name, who don't pay any taxes. What do I need to do that?
that don't pay any taxes.
Make sure that the audience
I'm not
knows.
naming any names.
No,
I'm
all
just
right,
saying.
let me just make sure the audience know that I'm not that big politician and I got a tax bill. And I tell you, so it's not me. It's that other one. the
Right. You
orange
don't
man.
look like you either.
The orange man.
So I could maybe piggyback off that a little bit because I had this conversation a lot in some of my Zoom classes. So the orange one, look, also had over 500 S corporations on their taxes. A lot of people don't know that breakdown. That particular person is a business, right? And literally runs everything like a business. So that tax return that was going around was in 2016, 2017 was like $750. That was a tax return. A lot of people don't know that return had over 500 S corporations to it, right? And that's the thing about business. This is what we need to understand, right? That particular politician also has bankrupt over eight companies, right? And has done it the legal process, because this is what is in the business tax laws. Okay. And so I try to explain that to people. Sometimes you look at yourself as, I look at myself as a Steve Jobs from an Apple, right? I'm a CEO of my company. And a lot of people don't see that vision, right? You don't see yourself as a Target or a Walmart or an Amazon one day, but we actually have the exact same tax codes and can take advantage of the exact same tax codes that they do. It's just we are not having conversations like this. So again, thank you so much, Natasha and Ebony, for having this and inviting me on today, because if we start having these conversations and we start empowering more of the small business owners, the self-employed, the 1099, then there's some things that can really happen, right? I have changed my entire life because of this industry that I'm in. Once I learned taxes and business taxes, my life changed, literally, right? And it's all because of learning and finding out this information. I was huge on individual taxes, but once I started learning the business tax code, I'm like, oh, this is the best thing since sliced bread. But also, America is a corporation. America is, I'm not even gonna go there. America is a corporation, okay? And if we start understanding that, right, and I'm gonna just say this, we have to start as people to get out of our feelings. There's a lot of feelings are out here, but at the end of the day, we have to get into black and white and what's on paper, right? When I say black and white, what's on paper? I'm going to look at the law. How can this law benefit me? How can I bring this law to empower the people in my community, the business owners, the business professionals, so that you can understand that if you do these certain things and we structure things this way, you can hold more money in your business. You can hold more in your pocket. You're able to pay yourself more. Even our 401k, our self-employed 401k, I forgot, it's over like 60,000 at this point. I think last year, I got to look on there and see real quick. But like our self-employed 401 IRA 401k, we can put like almost $60,000. That's a tax strategy. If you made $100,000 and you're okay with not necessarily having to put all of that money into your personal or if you don't need those funds right away, but that's a strategy that we can put up and move those funds over now into a whole nother other category that saves you from paying on that $60,000 to all because you deferred it into a 401k so you can invest for your retirement. Then again, that makes sense, right? So it's with the education part with this. That's what it is. We as accountants, tax professionals, CPAs have to also educate our clients and non-clients, right? Get in these rooms, have these panels, these discussions. I would invite you all to come out. We're part of, Natasha and I are both a part of the Dearborn Realtors Board. We are the oldest Black trade association in the nation. We are having our Community Day event on April 12th. And so Community Day, we invite the community out for free. We host classes, workshops. We'll have attorneys there. We'll have workshops on credit. We'll have workshops on men buying houses. So we're very big with doing this on a regular basis, educating the community. And I would just love to invite all of you all out if you're not already planning to come out, which is April 12th. It'll be at Olive Harvey, and I'll drop that link in the chat if you don't mind, Natasha.
Oh, no worries, no
Thank
worries.
you.
Is
Thank
they're
you.
going to help them? Because I'm still, as old as I am, I still take it personal, the doggone IRS. It gives me, I mean, I can't help it. I need therapy. Now, if there's one thing I need therapy about, it's the IRS. It's some serious stuff. So I advise everyone to get to know these people or know someone.
Yes.
You got a doctor, you need a accountant. You got
Right.
that accountant.
Yeah, I think
Yep.
the important thing that we're saying today is that this is about strategy, right? And so
Right.
people say like, oh, you know, this person is doing this and this person is doing that. And it's like, well, that's because they have a strategy in place.
Yeah.
And they didn't come up with that strategy by themselves. They used professionals. So, you know, Brian is my CFO. A lot of people don't, you know, small businesses don't have someone that says, okay, I'm going to direct the finances for your business to make sure that you're taking advantage of all of these strategies. But when you have those systems in place, and a lot of times we don't do it because we don't want to spend the money for it. But you know, what we find is that you spend the money for it and it makes you money. So everything that these accountants and tax strategists are telling you today is that if you have a strategy, you in the long run and actually in the short run, you make money. So as we're going into April 15th, which is coming up very quickly.
They go
and
to that
then-
stress.
and yeah, I mean, it's stressful, you know, and then maybe the business tax deadline, which is March 15th, right? That one passed already. So if you have a business and you didn't file your business taxes, a lot of people don't know. I have clients that don't know that. I'll mention that the business return is due before the personal return. They'll be like, what? Yeah. So it's two different dates. But that's why you need these professionals, because otherwise you're getting the letters about the fines and everything. And all that money you're spending on all of that could have been money you spent on hiring the appropriate person to assist you.
There's
And
two questions
finally,
I have. You got another question online? Because I have two questions before.
go ahead with your questions.
One question is, I think you said you live by your business. What amount can be written off for meals, and how do you make sure that you prove that this was a business engagement? Every meal could be written off. Can your business expense meals be 100%, 50%? What's the write-off for your meals? That's the first question. And then for people that's making all this money to avoid big tax bills at the end of the tax year, what do you recommend?
Good question.
So in regards to, I can take a stab at that. So in regards to meals and entertainment, if you're entertaining a client, it's 50%, right? So you get to deduct basically 50% of that expense. However, if you are doing a meal for your company, let's just say, right? So you have an office, you buy food for the entire staff, that's actually 100%. Right. So when I'm speaking with clients, you know, you want to understand the difference, because not everything is 50, right? It depends on what the meal actually is. So that's the first thing. The other thing I would say is, you know, when I talk to clients, it's all about like trying to live what I would call a tax deductible lifestyle, right? And Patricia talked about this a little bit earlier. You know, we have to have the mindset that everything that we are doing, we're doing it for our business, everything, right? So every outflow of cash, every dollar that is spent, how can we ethically relate that back to the business, right? That's the mind frame that we should have. When I speak to certain clients, you know, I ask them about, you know, what they're doing for the holidays, and, you know, say, well, I host, you know, Thanksgiving in my house, or I host Christmas in my house. I think about it a little differently. I said, well, are you really hosting Thanksgiving or Christmas, or is that your holiday party in which your family's coming over? Depends on how you think about it, right? You know, it's again, how do we ethically relate what you're doing back to the business? So if your family's coming over, in my mind, you're inviting your family over to talk to them about your business and what you're going to do, and you want them to be clients, and you want your family to go out there and get you additional clients, all about your business, right? Those are the things, that's the way that every entrepreneur should be thinking. Everything that I'm doing outside of my W-2 job, if I have a W-2 job, or even if I don't, everything that I do is about my business.
Yeah, and I think that that's really important, and that's something that I learned the hard way. I am a entrepreneur, but I am W-2'd. So I think I'm taxed at honestly 70%, but I think it's at least 36%. But I was getting my W-2 and I was depressed to see how much money I had paid into, and it just felt like 50% with the taxes and with the small 401k match. And, I had to figure out and learn how to strategize, but I had businesses, but I wasn't meeting with my accountant, even though she asked me several times to sit down, and I was finally able to do that. And I was able to restructure some things, which has been amazing for me with my businesses. So like, as they mentioned today, if you guys are out there, you could be a W-2 employee. I have a lot of clients, earning $300,000, $400,000 a year in the highest tax brackets ever, with no real estate, with no side businesses. So definitely tune in, because I was one of those people, and I had an amazing accountant. I just didn't make my appointment. So since then, I was forced. I was voluntold to sit down and do what I needed to do. And everyone is not going to have an accountant that's going to hold you accountable like that. You have to hold yourself accountable. So definitely tune in and learn this information. I do want to ask a question. I know Ebony has another question. We hear all of these people talking about, giving their kid, and I wasn't joking, I was dead serious when I said it earlier, but giving their kid a job and being able to, give them income, which helps them in the future. Do you guys know about that, or want to comment about how you can have tax savings for your, by hiring your children to help offset some of those taxes?
Yeah, that's actually real. It's very real. It's a very real strategy. The thing I will say is, one, you have to be making the income too that you're deducting, right? Because I feel like a lot of times when I see these type of videos on social media and TikTok, half of the people that are asking is like, you haven't even made the income yet, right?
Right.
So
They're
let's
like,
just
I
say
got an LLC.
I got an LLC, but then I'm like, okay, well, what's your sales? Oh, well, I haven't made any. Well, how are you going to pay your child, right? So we have to, again, be realistic, right? So let's just, Brian started with the 100K, so I'm kind of utilizing that term, right? Let's say you make the 100,000. So if you have a daughter, which Natasha, you do, and a son, right? They're under that. I want to say on the IRS site, they still have to be under 18. It might say 17, but I want to say under 18. But let's say you give them a position. You still have to give them a real job position, right? Let's say maybe she's your phone clerk, right? Maybe you give your daughter 4 days a week. She works 4 hours a week. That's 16 hours a week, right? You will give her a timesheet just like you would any other employee. She will log in, sign in. You will, so now when you're paying her, right, she can either take that payment and do as she will, or what some parents do is they set up a Roth IRA account. And they deter that money from again, this is the business money, right? So the business makes the money, you're paying your child. Now that money is now going to your child, but you're now flowing that into maybe their Roth IRA, or you're giving them that money as their, not necessarily giving them because they work for it, right? But it still has to be structured. People just think like, oh, I can just add my kid on. No, your kid has to still be listed with a title, with a certain role, right? What is their role? I had a client who had a 4-year-old, and we put on there like that she used to do. What did she used to do? She used to like fold the envelopes in the paper. He had a credit repair business. So she was literally putting the envelopes and the stamps on the paper, right? So that was her role, right? We would actually put her on payroll for maybe 2 hours or whatever at her dollar amount. And then now at the end of that week, he can cut her a check. But now that check for him, because she was so young, we were routing that money into a Roth IRA. But the business was able to basically pay for it. And you can really do that. That is real. You can really pay your children and have them on payroll. But again, the business has to be making the money. You have to make the money in order to be able to deduct it. That's one of the main rules that are in that IRS what is the word I want to say? Every single tax law, every single publication, there's a publication for it. So you can go on there. I tell my clients all the time, if I'm talking to you about something, I'll send them the publication. A lot of them won't read it, but that is it. You can go on the IRS site, and if you have a question or you want to learn a little more, you can literally type it in and it will show you the publication. And then you can read in that publication what those laws are. And so as long as we are matching those and we are following those and keeping up with that structure, then yes, that is a valid legal write-off that you can do in your business.
Awesome.
And
And
then
just-
Go ahead.
No, I was
Brian.
just gonna add a little piece to it, take it a little step further. So in paying your kids, if you're a corporation or an S corp, technically, your kid would have to file a tax return on the money that you paid them. If you are an LLC or sole proprietor and you pay your kid, and your kid is under 17, the money that you pay them, you get to get the expense, but your kid wouldn't pay any income tax because of the standard deduction, right? So there's a difference there. The other thing is when you think about taxes, I mean, there are some gray areas, right? So Patrice just mentioned that, well, you technically have to have the money to pay your kid. You could be a little aggressive and say, well, a business has the right and, can have a loss for a couple of years, right? So out of 5 years, you at least want to show a couple of the years you've made some money, right? So in your early years, maybe you took a loss and you took that loss, but you paid your kids. You can do that as far as I'm concerned. And that's how aggressive that I would be with it. So I just wanted to add that tidbit of information regarding paying kids, but it's real, it's automatic tax savings, and it is a for sure way to set your kid up to be wealthy in the future.
Yeah,
Okay.
we got to talk a lot more about that.
Yes, we're going
And
to get
Ebony,
into that
before you get
generational wealth
started,
as we flow into Financial Literacy Month in April. We definitely want to try to figure out how to have you guys back another time because this was an amazing discussion. I do want to just ask one last question, and that is for each of you to tell us about your business and how you help clients. What makes you unique?
Well, I'll start. My name is Cynthia White Wilson, as everyone knows. I have been in business for over 40 some odd years. I have been on my own since 1994. I am a WMBE. I am WMBE certified with the state of Illinois. I am SAM certified with the federal government. These meetings we're talking about, I hold often here. I have a couple of professional buildings here in South Howland where we hold these meetings regularly because I am a business consultant. I do taxes, I do accounting. We're a full service accounting firm. But I really love working with the entrepreneurs that are trying to come up, trying to find what they're passionate about so we can make sure that things are coming up the correct way. So we hold a few of those meetings at least once every 2 weeks here. So I do have a group of people that bring people to me so I can help them out, because when it comes to us, we need all the help that we can get because it's not readily available all the time, especially when it comes to us. When we're looking for loans, when we're looking for ways to get started, when we're looking for whatever we need, it's hard to find. So what I do here is I try to network, and I have many, many businesses because I used to be a military wife. So I traveled all over. I have clients in over 29 states. So we're well-rounded here. And this is one thing I'm really appreciative of Natasha Robinson asking me to join, because this is just a passion of mine, to make sure that we are informed. So, because to me, I feel we can do anything anyone else does, and we can do it better. We just need a little bit of help. And I'm
Absolutely.
here to help.
Yes, thank you. So Cynthia, can you tell us how we reach out to you? Are you on social media or how do we find you?
Here we go. I'm telling on myself. I'm understanding I am on social media. I have an IT department that makes sure I am, but I shall put into the chat my contact information. I'm old school. I do email, but I answer the phone very well.
So tell us your phone number and your email address real quick. And then you can
My
put it in
phone
the chat.
number, I can be reached at 773-734-6646. My email address is cwilson, CWILSON, at whitewilsonaccounting.com.
Thank you. Brian, tell us about your business and how we can get in contact with you.
Oh, sure. So just to let you know a little bit about myself, though, I'm from the South Side, received my undergrad from DePaul University, my MBA from Northwestern, started my career out at Arthur Anderson, worked in the tax practice for several years, and then spent some time in banking, and then did some finance jobs at Kraft Foods, Sears, and Bed Bath & Beyond. But throughout that entire corporate journey, had always been doing taxes on the side. And then in 2020, I went on my own. So started Blake Allen in 2018, but really went on my own in 2020. My background, again, I'm a tax consultant, so I'm tax trained. But over the years, I've also gotten into books. So for many of my clients, I also keep their QuickBooks as well as do their taxes, kind of acting as the CFO of their business. I think one of my passions is just wanting to help people, right? So it's just amazing, what people don't know about money, what people don't know about taxation, and trying to educate people and help them get better. So that's what I'm all about.
Awesome. How do we get in contact with you?
Oh, but I put myself in chat, but yeah, I'll put my information in chat. But my telephone number, if you want to call, is 630-318-6899. And I'll put my information in the chat.
Sounds good. Are you on social media?
I guess the quick answer would be no, not like I should be.
Okay, accountants.
We got to get these accountants on
Right.
social media. Come
We
on,
do.
guys.
We
Somebody
do.
contact you guys.
We do. We do. We do.
Patrice, tell us about your business and how we can get in contact with you.
So my company name is Tax Cred Academy, and I what did I do? So I graduated with my bachelor's from Chicago State, and I'm from the South Side of Chicago. I'm from South Shore. Grew up in South Shore my whole life. So for me, I kind of call myself book smart, street smart, because I'm very passionate about my community. And I would love to see more people, start some form of business, right? Everyone doesn't want to be a business owner, but, having a property, getting into real estate, getting into owning, right? Land, buildings, that's still a business. And a lot of people, don't understand that. So one of the things for me, online, I'm Patrice L. Stewart. I do have the Realist Tax and Business Strategist trademarked, because that's kind of how I built my following these last couple of years. I left corporate America in 2013 when I got let go. I worked for BMO Bank for about 6 years, and I got let go. So at that point, it was when I decided that I was just going to take a leap of faith and, do this full-time tax and business strategy. I used to offer accounting and bookkeeping services, but I kind of refer those out. So it would be great to have the contacts of Brian and Cynthia. I do work with an office too, but I am on social media. I do have every platform: YouTube, Facebook, Instagram, TikTok, and I'm Patrice L. Stewart on all of those platforms. It's the same name, Patrice L. Stewart.
Thank you. And I love that you said you want to work with the other people here, because that's really what these meetings and these meetups are all about, is networking as much as it is and giving information. So thank you all for coming today. I want to make sure that we tell you about our upcoming Financial Freedom Path series for April. So Natasha, go ahead, take it away. Tell us about our seminars that we have coming up. And these are in person, y'all. So we want to see you in person at the events, because they're going to be really great. And we're going to have awesome people just like we did here today.
Yes, yes, because I still didn't get my the Range Rover G-Wagon question out the way. So for the write-off. So we're gonna definitely bring that back. But guys, yes, thank you for joining and Building Dreams Foundation. We are going to be having a monthly meetup, but in April, because it's basically financial literacy month is what I heard, right? So we're gonna do a weekly series in April. And after that, it's going to be a monthly event all the way up into our Black Friday event, which you will hear about soon. And yes, we are planning it early because we want to make sure that we give you guys all the tools and connections you need, but we want you to join us coming up. Our first week is how to fund your business. And LaShawn Ford, Ebony Lucas, and I are professionals in real estate. You know, LaShawn is a state rep. So when you see our events, we're definitely not the speakers. For the profession that the topic is on, we will have professionals in the building. They aren't on the flyer, but we will have individuals coming to give you guys a lot of information. So please don't miss out. But that first event is Fund Your Business with Grants and Lending at Nitro Nostalgia, which is on 42nd and Cottage, owned by Miss Ebony Lucas, entrepreneur and attorney and Building Dreams Foundation advocate right now. And then the next one is Retire with Residential Real Estate. We always talk about real estate and we got to keep it going, but we have so much more than real estate because so many more things can help you build generational wealth. But this topic will definitely be about residential real estate. It will be at my office at Guaranteed Rate Affinity, 54 East 26. We're going to master the stock market, guys. This is a very important topic and we have no gatekeepers. They are going to be coming out to teach you about the stock market. That is also at Nitro Nostalgia, and you guys are going to love it's infused ice cream, and you're going to be getting this information about the stock market. Then we're going to go talk about commercial real estate. Commercial real estate is important. We're going to talk about that house hacking in the residential real estate, but then you're going to gain some money, some equity, so that way you can go into commercial real estate, which is also important. And we're going to talk about that back at Guaranteed Rate Affinity, 54 East 26th Street. And we're going to end the month with our Wealth Builders Meetup, Estate Planning Probate. Did you guys hear me say estate planning? If you are listening and you are working and you do not have a will, you have a small problem, right? If you do not have a trust, and I'm not going to say what you have to have, but you definitely need to know about estate planning. And that will be at the Royal Bistro Live in Lansing, Illinois. That is a business that I do own. So once again, we are giving you guys a platform so that way you guys can come out and learn all of this information. You can scan the QR code and then you'll also get an email on the events as well.
Yes. So in April, we are supporting Black-owned businesses. It is Financial Literacy Month. We are learning, we're building wealth, and we are retaining that wealth. We're not just making the money and then giving it all away to the government. And that's what today was all about. So thank you so much, Brian, Patrice, and Cynthia for joining us today. And we look forward to you joining us again for sure in November at our wealth building seminar.
And Rep Ford, if you're going to leave us with some great words,
yes,
before we wrap up.
Well, I mean, I would just say that it makes sense to have a person that help you with your finances. And I think if you heard anything today, you know that if you want to be a smart, savvy business person, you definitely need someone on your side, an accountant, a bookkeeper to help you with that.
We are on your side. Well, thank you guys for joining us today. We will see you soon live. The events will not be virtual. We want to see you in person so that way we can network and connect. So we will definitely see you guys soon and have an amazing Saturday.
I want to answer a quick question. Somebody asked if the events are on Eventbrite. They absolutely are on Eventbrite. It's the link that's on the flyer, which is bit.ly /financial freedom path, and we hope to see you this month or next month in April, starting this Wednesday coming up.
Awesome.
Thank you.
Tell somebody.
Goodbye, everybody. Have a great weekend.
Have a
great day.
Successful.